Thanks for tuning into IPO Adda. China's Shanghai Fosun pharmaceutical-backed Gland Pharma IPO is slated to open next week. And Mr. Srinivas Sadu, the managing director of Gland Pharma, joins us right now to talk about the IPO, the company, and the outlook ahead. Mr. Sadu, good having you. Thanks so much for joining in. Hope all is safe. Tell us a bit about the company and the issue details.
Well, the company is almost like 4-decade company, right? It started in 78. We've been a boutique contract manufacturers till 2000. Then we kind of thought about how to grow this business. Then we wanted to create the company around manufacturing portfolio and focus into the US market because we were ahead of other people in terms of injectable space and no one was selling in the US from India in terms of generic injectables. So we kind of set up the goal of becoming a global generic injectable player while providing value-added solutions to companies who are seeking contract manufacturing, and that's how we started our journey. And today we are a company with $350 million revenue and about 3,700 employees. We have 7 facilities. We are vertically integrated, and from the issue size, we have the band is around 1,490 to 1,500 per share. There's a primary portion about 1,250 crores, and the secondary offer for sale about 22.5% offload from the previous shareholders. So we are dominating in this space. We're one of the largest and fastest growing injectable companies in the US generic space. Ours is a business B2B model. We supply to a lot of large pharma companies who sell directly into the US market. We sell our products across 60 countries now. Our revenues wise, 67% of revenues comes from the US. And we are going geographically because that's one of the largest market in terms of generic injectables. That's a key area for us, while we're focusing on other geographies as well moving forward.
Yes, a bit of a sweet space, and for a company of your size, the expectations are much higher too. Can you tell us a bit about how your growth trajectory has been and what do you expect it to do ahead? Because when I look at your numbers from FY 2018 to FY 20, they are very impressive, be it on the revenue growth, on the bottom line growth, on the net worth growth as well. How do you proceed ahead?
So, our target was, to build a company around our strengths, right? We worked almost 10 years to build, initially, before we got into the US market, we wanted to build massive manufacturing infrastructure so that, in injectable space to be dominant, to have those cost advantages. You need to have the per unit cost down. So we focused on that. While doing that, when for companies with large throughputs always have issues with the quality, but we focus a lot on quality because the quality foundation we got, even when we started this journey in 2000, it was great. We have a quality systems in place. So that's another focus area. And then having build a portfolio around a wide range of therapeutic areas because we need to cover all our bases. And that's one of the reasons, actually, even during COVID times, nothing really impacted us. We have great quarter. We have seen the results in June. So we have products to cover most of the therapeutic areas. And in injectable space, like you said, it's a sweet spot in terms of it's difficult. A lot of entry barriers for people to come in and dominate this space. We've been in this for the last 40 years. We know the play in this. We are big in anticoagulants. That's how we started our journey. And even in COVID, heparin, we're known as a heparin company in India. It's a blood thinner. And you hear this these days because one of the protocols is low molecular heparin used in hospitals these days. That also plays a major role in our portfolio. And we have wide portfolio across all therapeutic areas. Anti-infectives, we play a major role. We almost have 30% of our revenues comes from anti-infective as well. And moving forward, in terms of growth, we have plans to expand our capabilities in terms of technology. We're getting into pens and cartridges. We're getting into hormonal side of the business. We're getting into long-acting injectables. To support the peptides, we have invested into pens and cartridges. Like I said, we are vertically integrated, which again unique, unlike a lot of companies, because we have seen over the years the API companies tend to exit the space because the quantities required to support the APIs for the injectable space are low, so they kind of exit. Or even if the supply is kind of more expensive, so we kind of dominate that. We are vertically integrated. Almost 20%, 25% of revenues comes from our own vertically integrated products. So that way, we have a plan in place. Almost 17 years ago, we keep on adding, consolidate that plan, expand into different delivery formats, expand the portfolio, expand geographically as well, and that will continue in the future as well.
Yeah, it's a bit of a unique model. You are a B2B player as well, and the front end is owned by your partners in the US, and therefore for a lot of people, it becomes difficult to estimate as to what percentage of products might be in a shortage list in scenarios like these, and eventually how the growth numbers would be. I think the assessments are that even for the near term, nearly 20-25 of your products are in the US shortage list alone, and therefore the near term appears to be pretty strong. Can you, without getting into numbers, maybe briefly tell us how the Q2 which went by was, and how is the scene looking like in Q3 and Q4? Because again, I think the stories are very, very bottom up. What's happening to one pharma company need not be true for some of the others. So can you tell us a bit about yourself, the near term?
Absolutely. I mean, although we cannot give a clear guidance because of the restrictions we have, but of course, we should look at what we have done as a company. We have built this company. We don't look at the shortages as a business model. We look at how, in the long term, what takes us in the future to grow. What are the products which give us profitability? If you look at our growth trajectory last 3 years, it's almost 28% CAGR, like you said. Now, what has contributed to that? The new products has contributed 10%, and that will continue. Every year we file about 20-25 NDAs, so we're going to launch that. The products which are going off patent, we make sure that gets launched on the first day of patent expiry. Then we also focus a lot on the older products which you've already filed. I think a lot of companies tend to only focus on the new products. We also tend to focus on the older products. So even the older products are contributing to a growth, almost 14-15% of growth comes from the older products as well. That's precisely because of the areas we focus on in terms of cost containment. And this is possible because, one of the business model, what you mentioned about, right, the B2B model is unique. If you ask me, there's no peer-to-peer, like-to-like peer in the industry for us. There are companies who are B2C, there are companies who are straight B2B, but we have a mix where we develop our own products, we license to front-end companies. For most of them, we are a go-to company for the front-end pharma companies. We also accept tech transfers from their sites to our sites. We also supply that. So several times per molecule, you might see in the US, there might be 7-8 ANDAs. But product might 3 or 4 products might actually be going out of our site. This is helping us to leveraging our capacities better, and we're keeping our costs down. So that's making us more competitive in this space, and that's one of the reasons we're growing in the older market. So this model will continue in the future, except in India where we do some B2C business, directly sales. We have a sales force. The rest of the world, we continue to be in the B2B space, and injectable space is growing. The US itself is estimated to grow up 16%. And if you look at next 5 years, almost $60 billion products will be going off patent. Last 5 years is about $30 billion. The products what we have launched, it's only about $8 billion till now. So a lot more areas to grow in that. And we are launching more products in the future as well. And we are entering to do different delivery formats, which will help us grow in terms of revenue as well as profitability.
As I see the usage of the IPO proceeds, Mr. Sadu, very, very small amount for capex. Are you suggesting that you're done with a large portion of your capex, which will reap fruits going ahead? Or do you believe a large portion of the capex would be done by internal accruals and you don't specifically need the IPO proceeds for the same?
We need that for working capital. We have already invested a lot into manufacturing capacities in terms of delivery formats from the internal accruals. Right, like you rightly said, we have used internal accruals over the years to build this expansion plan. So already we have invested into hormonal line, we have invested into pens and cartridges. So this is like an addition to that what we have already invested into next 2 years. So the capital expenditure, what we're going to utilize from these proceeds, and what we have already using from internal accruals will help us for next 5 years growth plan in terms of volumes. That's the plan.
Okay. There is an article, Mr. Sadu, in one of the dailies today about the ED directing the company to transfer Ramalingalaju's stake to it. Could there be any hurdles to the same? Could there be any issues surrounding this?
No. So this is a very private investment, which they made almost in 90s. And when the Satyam issue happened, the ED has attached those shares, and it's completely private. And when these IPO has started, we have informed them, and they asked us to put it in escrow, and which we have done. It's completely private to the party, and it's nothing to do with IPO, nothing to do with the company. And these shares which are offering are completely independent of that.
So the IPO would not face any hurdles if indeed there's a delay, and you already has put it in the escrow account, you're saying?
Absolutely. Okay. We are planning to do that. We've already confirmed to ED on that. Okay. And these are private shares. and it's completely between them and the ED.
Got it. One final question, and I appreciate the fact that you can't give exact numbers. Maybe we'll talk about it post the listing. But just one quick thought. You've grown at a fairly electric pace in the last 3 years. The size and the base has increased thus, but the pharma industry, the Indian pharma industry, is also in a sweeter spot than probably has been in the last 3. On a higher base, would it be safe to assume that you could maintain the growth trajectory, or would you have a good growth trajectory, but maybe not in the same vein because of the higher base?
Well, the base is high, but if you look at what investments were to made, what products we have approvals, out of 265 ANDAs which have approved, which have filed, 60 are pending approval. There's several tentatively approved products which we'll be launching post expiry, patent expiry. So there are large products in that portfolio as well. Still, we have to leverage our oncology plant. It's not completely leveraged. We have Penems plant which are not leveraged. So there's a lot of capacity, a lot of products which are not launched yet, which have filed. So in terms of growth, we have enough products in our basket, enough manufacturing capabilities. We are investing into manufacturing capacities. That should give us, keep us in a good stead in terms of future growth as well.
Well, we wish you all the best for that. All the best for the IPO, more importantly, right now. And we look forward to talking to you post-listing.
Thank you so much. Take care. Bye-bye.
The pleasure is ours. Take care. And viewers, thanks for tuning into this segment of IPO Adda of Gland Pharmaceuticals.